Hey there, ACCA, Financial Management friends. My name is Steve Willis, and today we are looking at the infamous topic of net present value. We are looking at the past exam question Pinks from March, June 2019. Crack open your spreadsheets. Let's get started. I have the ACCA spreadsheet open. You can do the same in the practice platform, so go ahead and do that. I have the past exam printed out from the ACCA website. We can simulate a CBE experience working in the practice platform and using our past exam question from the ACCA website. Now, before we go further, please take half an hour and try this question at home on your own, then come back here and let's compare our answers. Welcome back, friends. Let's get started together. So this is a very busy NPV question. We have different discount rates. We have lots of inflation, so we will need some workings. Let's get started with years. We know we're doing time value of money, so we always need some years, and we will also do the nominal NPV first. Okay, so we've got 0, 1, 2, 3, 4. We see taxes paid in the same year as the cash flows, so we don't need to tack on the extra 5. And there's so much happening here. Let's set up a whole bunch of workings at the beginning, which will make our cash flow, our net cash flow working go faster. There's a lot to do with inflation. We have to inflate the price, the variable cost, the fixed costs. All of these items have different inflation rates. So we can use a standard approach here. We can have the price. Okay, then we can have our compounded inflation rate. Then we can have the inflated price. We can have the variable cost per unit. We can have our variable cost inflation. Okay, then we can have the inflated variable cost. We can do the same thing now with our fixed costs. So fixed costs, fixed cost inflation, and then we can have the inflated fixed costs. Remember, there are no marks for spreadsheet skills, no marks for formatting, no marks for financial modeling. I'm going to use these simple abbreviations. As long as the marker understands what I'm doing, I will get the marks. So we have some workings at the top. It doesn't matter where we put our workings. And with that information, we could then do our net cash flow. Our table's getting pretty big, so I'm going to copy paste these years again. I could just park them down here. That'll make it easier, less jumping around. And if I'm going to do a net present value exercise, we know we need to get some sales on the top line. But in order to get sales, why don't we put demand here first? Okay, our demand multiplied by that price will get us our sales. Then we can get our variable costs, total variable cost, total fixed cost. We don't need a contribution line there. The model solution might have it, but no mark for that. Let's just get down to a taxable cash flow line. And that's what's coming at us now. Then we can take out the tax that we see. Then we can apply the benefit of the tax allowable depreciation benefit. Okay. Looking good, guys. Now we have a cash flow line. Okay, CF. And when we're all done with that, to get to the end here, we will need the present value of the cash flows years 1 4. From that, we'll subtract the initial investment. And the difference there will be the NPV. Look at this massive template we have built up before we do anything. Okay, look at that. A lot of work here. Okay, so let's now get started with the compounding business and the inflation. We'll come back upstairs here. And they tell us those prices are 125, 130. Remember, this is all before inflation. 140, 120. And price inflation is 5%. So the compound inflation, that's going to be equal to 1.05. Okay. And we compound that by multiplying the inflation in year 1 by that same rate times 1.05. Okay, look at that. Now, using relative cell addressing, I can just drag this across, copy pasting nice and quickly. Okay. We're going to do some formatting later. There are no marks for formatting, so don't go crazy with colors, with different fonts. Well, you can't change the font, but you know what I mean. Keep it very simple. Now the inflated price will be the price in row 4 multiplied by the inflation in row 5. Copy, paste, paste, paste. Copy, Control C, Control V. Okay. Now they tell us that that variable cost is 71, and it's going to be the same every year. And copy, paste, paste, paste. The inflation rate for the variable costs, everybody, are 3.5%. So that's going to be equal to 1.035. And in cell E, same thing we did before, multiply by 1.035. Copy, view, view, copy, paste, paste. And we can just copy row 6 right down to row 9, and relative cell addressing makes it nice. Fixed costs are different every year. So we've got a 3,000, we've got a 3,100, a 3,200, and it backs down to 3,000 there. And here the inflation is 6%. So that will be equal to 1.06. Cell E11 will be equal to D11 multiplied by 1.06. Copy, paste, paste. Let's copy that row one more time. Now I'm going to grab row 9, copy it down to row 12, and we've made quick work of our inflation workings, everybody. Okay, team, let us now go to our cash flow line. Let's tell the marker that we're working in some countries dollars. I can put a little single quote mark there, type the dollar sign and 000, and that will treat the cell as text rather than a number. Okay, and we have our demands. We can pull those right from the question. So that will be a 300, a 410, a 525, and a 220. Now the fun begins. Sales will be equal to the demand multiplied by the inflated price. Let's be very careful that we are grabbing the right cells. Total variable cost, again, will be the demand multiplied by the variable cost per unit inflated, and let's put a negative in front of that so we can use the sum function in a moment. My total fixed costs will be equal to my inflated fixed cost line made negative with a negative sign before the cell reference. And I can just grab all of these and do one nice drag. Isn't that fun? Now, let's come here and underline that, show marking team that is clearly going to be a sum. And we can use the sum function here. That's equal to sum of the 3 lines above from 17 to 19. Copy, paste, paste, paste. Okay, we know that tax is 26% in the same year. So the tax will be equal to a negative 0.26 multiplied by the taxable cash flow line above. Copy, paste, paste, paste. Now we need to do the tax allowable depreciation working. So let's just come down here. Tax allowable depreciation. So we have reducing balance. So this is the version that's a little bit more work. Again, we need our years. It's just easier to retype that than copy paste at this point. 1, 2, 3, 4. At the beginning of year 0, we buy the asset for $20,000. Okay, and the tax allowable depreciation is reducing balance 25%. So at the end of year 1, the tax allowable depreciation will be 0.25, 25% multiplied by that opening balance, by that 20. Okay, and the written down value at the end of year 1 will then be equal to the 20 minus the 5. Look at that. Now, drag this, copy pasting all the way across. Now, let's adjust the last year's tax allowable depreciation. We're allowed to depreciate the full amount. So in the final year, we will then take the opening balance, the 20,000, from which we will subtract the depreciation to that point. Okay, and that gives me the depreciation in the last year when the asset is now fully depreciated. A common mistake is to bring those numbers upstairs, but what we really want, we want to get the tax benefit of this. So we need to multiply this line by 26%. Okay, there we have it. And we can now copy, paste, paste. Copy, paste, paste, paste. That is the tax benefit. That is a positive number. We will keep it positive. So I can zoom out for a moment here. I can come up here. The tax benefit from that depreciation will be equal to the numbers in row 32. Copy, paste, paste, paste. Now, the cash flow then, let's very carefully open up a sum function. And that will be the taxable cash flow line net of all of those tax items. Copy, paste, paste, paste. Look at this, what fun we're having with the spreadsheet tool. Let's underline that, show the marker, show users of the spreadsheet that the next line is a total. As I've said many times, there are no marks for formatting, but just to clean this up and present it a bit more professionally, maybe it will be easier on my eye, less likely to make a mistake. I can set this now to no decimal places. So it's nice and clean and easy to read. Guys, we've got our cash flow line. Let's do the last part of this. Let's get the net present value. So I will make this really easy with the NPV function. So I'm going to open up a function called NPV. Nominal cost of capital is 12%. So I put that in as the first argument, 0.12, comma, and I want to grab these items here. Okay. I realize I put that 0. We didn't really need the 0 upstairs, but it's there. We don't lose a mark for having year 0. So I'm going to show year 0 here. The initial investment, that's the negative 20,000. And the NPV then will be equal to the difference. I'll just sum that. And we get an NPV of 33337. Okay. Now, that is slightly different from what you might see in the book. That's because we're using a spreadsheet and we have different rounding. In the model solution, they used a calculator, so the discount rates were taken from the discount table in the back of the book. But those numbers are actually a little bit bigger because they don't stop at 3 decimal points, right? They go on longer. Now, just to apply the same cleanup formatting, look at our beautiful answer. Look at our spreadsheet exam technique. Looking really nice. Let's make it very easy for the marker to see what we're doing. Let's tell them that this is the nominal NPV. Okay. Let's come upstairs. Let's make sure we say that this is part 1. Yes? Now we can save so much time using copy-paste when we get to the next part of this. And this is a tricky point in the question. Let's take that. Let's move to part A2, calculating the NPV using the real discount rate. If you are finding this video helpful, feel free to throw down a like and hit subscribe so you get notifications when I come out with more videos. I'm copy pasting from here. Okay, from down here, I'm going to do a copy. Let's do a paste. Now let's get that nominal cash flow line. Okay. I'm going to grab that in year 1. Copy, paste, paste, paste. Don't need the year 0. Let me just take that out of here at this point. Okay. And here's the difficult working. The nominal discount rate is after inflation. The real is before inflation. And we have the general inflation rate. So we're going to take those after inflation cash flows here, and we're going to reverse the effect of inflation, but using the general rate of 3.7%. And they give you that 3.7%, so you know you need to do something with it probably, and this is what we do. And there's only 1 mark for this, so don't panic if you didn't get this part. Remember, you only need 50% of the marks to pass. So now I can do a real cash flow line, and we will reverse the effect of inflation by dividing by the general inflation rate. So the real pre-tax cash flow in year 1 will be equal to the nominal or the after inflation amount divided by that general inflation rate, which is 1.037. Okay, and we need to compound that so I can grab the year 1 so that we can see the effect of the inflation reversal in the next years with copy paste. Copy, paste, paste, paste. Now the rest of this is going to go easy peasy lickety split. The tax line I can just borrow from the other part of my spreadsheet. Copy, paste. Remember, we're using relative cell addresses, so it's the location and the relationship of the cell that defines how the how the operations work. We can grab the tax allowable depreciation, and for that I will set cell K7 equal to the item in D22, and I can copy, paste, paste, paste. I can now get a cash flow line, and again I will just grab my cash flow line from row 23 and park it here, and it's working out really, really nicely and quickly. Okay, and if we did this correctly, I can now grab the work that I did to get the NPV. I can copy that. I can paste it right here. If I put it in the same location, okay, it will refer to the same location in the same relative location in the spreadsheet. So all I have to do is change this to an 8%, 0.08. And if we did that right, we should get the right figure, and we do. Ladies and gentlemen, look at the power of the spreadsheet helping us, saving us so much time. Let's clean this up with the same formatting we used earlier. We'll take out the, round it to the 1. Let's put a little bit of underlining here. We can show that is a total. There's no mark for that. Just make it look pretty for this demonstration, everybody. Let us not forget the comment. Let's make it easy for the marker to find our comment. We can even bold it so they're going to see that comment and give us a lovely check mark. Okay, under both approaches, we see the NPV is positive, so we should accept the project to maximize shareholder wealth. The impact of changing the approach to real was minimal. There's my comment. Let's not forget, we can come back up here and change that nominal label out to a real label. Ladies and gents, look at the lovely spreadsheet exam technique. Practice this several times. Make sure you can do that in 10 minutes. I hope you found this video useful. Throw down a like if you liked it, and subscribe if you'd like to get notifications when I release more videos like this. This is Steve signing out. Good luck on your upcoming FM exam.